Hey everyone, this is Michael Bengiat. This is the Stock Picks weekend video for May 7th, 2022. So we're going to go ahead and look at the current market environment, which is, we're in a correction and it's getting worse as each day goes by basically. And we're going to review some of the stocks on our ready and watch list. There really isn't much in the ready. There's a few on the watch list, but the environment is just not one to be taking much any part of it at this point. But we still like to be prepared and see what's coming up. Before we start, here's our disclaimer. Please pause the video and take a second to read this. All right, well, our stock environment indicator is still red. The best trading strategy right now is no trading, and we have no exposure. So it's just we had a sort of an exciting week. The Fed Chairman Powell had his interest rate announcement that was greeted with a lot of enthusiasm. We had a huge move on Wednesday, which was basically short covering, relief rally, and of course it only lasted a day because it really wasn't, traders sort of reconsidered the whole thing, and we had a big reversal on Thursday and broke down below. On Friday, in terms of the trend, the NASDAQ broke below its sort of initial rally day, so its rally attempt is over, and the S&P and Dow are just hanging in there, but it looks like they'll take out the lows too, and we'll have to look for a new rally attempt. One of the things that's, this is really turning into a historic crash. The percentage of NASDAQ stocks above the 200-day is down to 12.66%. That is something we haven't seen since, the bottom of the 2000 and 2002 internet bubble crash, where the NASDAQ dropped about 85% overall, which is just an incredible amount. And so we're just getting almost no participation in stocks, which is a real big warning sign. And it just shows you there's still way too much bullishness going on and the buy the dip mentality. That probably needs to all go away before this market can really find its legs and head higher. And I'll show you a chart about that in just a second. But what I wanted to do first, actually, let's go ahead and just do that right now. So this is just some screenshots of my sort of big growth stock watch list. Now, none of these stocks we're ever recommending. There's a few that are hanging in there. Tesla's on here. I think Apple's on here. But I just wanted to show you these stocks are all well, we're going to show you what the stage 4 downtrend is, but I wanted to sort of cut ahead here because you can just see this was just on one day. Look at these stocks, down 8%, 9%, 10, 11, 12, 13, 15, 18%. That's just in one day. And this is after months of declining. And here, the following day, you can see we're down again, 5 to 11%. Here's the trade desk, one of the best performing stocks of recent years. It was down 11.73% this day, and it was down 11 point here. This is a 23% move down in just 2 days, and this is after it's already been declining. Zscaler is another one. We'll show you that in just a second too. So, but this has to go. Every morning I just kind of keep this list going, and the frantic trading going on in these names. It's just you just see them. They're just jumping all over the place. This be flying up here, down here, flying here. I think when this decline is over, this is all going to be like nobody wants to trade these stocks because they're all getting themselves killed. So, and these are the kind of companies that Kathy Wood of the ARK Fund invests in, and she's just killing her investors. I mean, she's down, it just continues to go down and down and down with no risk control. And, I think she's down over 60%. There was a big rally, I think in March. She actually rallied about 36%, but she's actually just broken to new lows on Friday. So that rally, 36% just got wiped out in the last 4 or 5 weeks. So you never see these stocks except for maybe Apple or Tesla because they're still in uptrends. But the vast majority of these are in these major downtrends, and you will not see these on our list because they are not set up. You should not be in any of these names unless you want to continue to lose money. So anyways, let's come back because today I'll make this video a little bit shorter. I want to go over through the four stock stages, and something that's super important to know. And I'm going to use Peloton for my example here. This was an IPO in 2019, and it was the right stock at the right time. It sort of was forming its initial stage one base right when the coronavirus crash happened. And of course, people couldn't go to the gym, but they could buy Peloton machines and work out at home. So it was the right thing to do. So for any stock, the stage one is where it's sort of either it's bottoming out after another decline, because these stages don't just happen once, they can happen over and over. Or in this case, it was an IPO, so it just started trading. And you can see there, it just was kind of had its initial IPO base. It broke out, didn't last long. And then this is a weekly chart. And then it came down and just ended up, making a new bottom here. And it was volatile. So you don't want to trade these because there really isn't a lot of opportunities. It's just very volatile, and more often than not, you get kicked out with losses. So, but eventually, and you can also see the moving averages. Here it came up, it was coming down. This one was starting. Now, because it was an IPO, some of its moving averages were just starting to appear. So, but eventually we turned into a stage two. And you can see stage two is where you make all your money. This is where you want to be buying stocks. You don't want to buy them in stage one because there really isn't an established trend yet. This is the trend that you can see. And look at all the up weeks, all the blue weeks. There was only 2 down weeks in how many have we after? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is called 20 weeks up, 2 down. This is where you make your money. So, and also look at the moving averages. They're nicely trending upwards. They're all lined up. This is the slower one, middle one, and faster one. I think this is the 10-week. So this is what we're always looking for. You want to buy stocks when they're in stage two uptrends, especially when they start moving, out of the stage one. That's sort of the best place to have bought. Now, right here was really the best time to have bought this stock. So then eventually we transition into stage three, which is the topping process. So here you can see we had a really nice move. This many up weeks in a row, and look at the volume here. It was starting to get a little overextended and a little too much enthusiasm. So this would have been, by this point, selling over here would have been a great time to have done it. But you could have held on thinking, well, I like the company, what it's doing. It's really nice earnings and sales. We had no earnings and sales, and then suddenly we're up, earnings up 259%, then 211, 190% up. Sales were huge, triple-digit sales. So I'll hang on to this. So we came down, we had a quick, sharp reversal, then we broke out to new highs. Okay, great. Then we formed another base up here, and then it was unable to break out, and it broke below the base. So here's our first sell signal, unable to rally, and we broke below. Then we kind of just had a larger correction, then came back up. Okay, maybe this is going to be just a large base, and we're heading back up. But it was unable to rally, and eventually rolled over, and we turned into stage 4, which is the downtrend. So if you were trading the stock, number one, this sort of blow off top phase on huge volume was a clue. We also had this day here, even though it was on really good earnings, we had a massive volume down week. So this was another sell signal, and we broke below the 10 week. In this case, it would be the 50 day. So we got some sell signals here. If you didn't get out here, you probably should have got out here. What happens usually is that you sell, and of course, the stock goes on to make a new high and make you feel like now you're missing out. This happens all the time. You have to just kind of control your emotions there, but it failed. So even if you hung in here thinking, I love the company, maybe you have a Peloton, think it's fantastic. Once it broke below this, you should be long gone. And even in this, you would have been out in the upper 70s or so. And if you'd bought it down here, you still would have had a good 75% profit. But these stage 4 downtrends, there's no reason to be here. I don't know who buys these. I know some of it is just fund managers trying to goose their returns, but usually they goose it to the downside. I mean, I think moreover, we're going to see the people that have bought all these because they think, oh, here it is, it's bottom, I'll buy it, I'll buy it. Oh, this one, here it's bottom, I'll buy it, and they just keep buying it and it keeps going lower. I mean, now we're at the lowest price the stock's ever been. So everyone's a loser. And if you bought it up here, well, you've just lost 90% of your money. You're never going to get that back. Maybe in 20 years. And also you can see what happened too. Why did it start declining? Is look at the sales and the earnings. All of a sudden the earnings went negative, and now not just 3 cents, but $1, $1.25, $1.39. The sales, we had triple digit sales, and suddenly now we're down to 6%. So it was a fad in terms of the stock. So that's why we've had the massive plunge. And a lot of times too, the best earnings are coming out right here at the top. So whenever it was all showing these big earnings and sales, that was it. And so that happens a lot of times. Sometimes on the peak, the best earnings and sales will come out. And I can't tell on this one, but we were pretty close. The investors figured that was probably it, and off we went down. So here's another one, Teledoc. Similar thing. We had this initial base building here. Also notice this was stage 1. So we kind of formed this base here, and notice how it got kind of tighter and tighter trading. We had a big decline here, then it came up, a smaller decline. Didn't go from here to here. It was less, then a little bit less. Then it came out. Then it had to form another base, and then it got even more tighter, and then we got really tight here. These little blue lines are showing 3 weeks tight, which means that within 3 week period, the price was really tightly closed. One more shakeout, and then we started the stage 2 uptrend. And also you can see, starting around here, we were getting all the moving averages lined up. So this was stage 1. You can argue right around here with stage 2. So this is when you would have tried to have bought it and take this nice move up. Then we sort of got into, you can argue this is maybe still stage 2, but it was getting more volatile and lots of volatility here. And we would call this here, when it started getting more and more volatile, right here, this would be the stage 3. In typical fashion, it tried to break out one more time. This again was a stage 4 base. Though that's something I haven't showed you yet. I think it's I actually don't have sorry, here it is. I'll come to that in a second. So let's come back to Teledoc. So we had a late stage base, and again, late stage base, you can see it formed a base, formed a base, formed a base. There was another one here. And by this time, when you start getting failures out of late stage bases, another sell signal. And then we started getting big declines below the key moving averages. If you were in the stock, this is telling you to say goodbye. And of course, we entered the stage 4. And I mean, this stock, every time it tried to rally above moving averages, just plunging. And then now we're at the stage where it's wiped out all the gains going back years now, and everybody who's bought this during this period is a loser. This is back to Kathy Wood. This is one of her largest positions, and amazingly, she bought it more shares right in front of this giant decline. I mean, on the earnings, and of course that was I think a 45% drop on that day alone, and she had just bought more, and she'd been buying it a whole way down, every dip buy. So again, this is why you can't bottom fish unless you want to, there's a saying, what's the best way to become a millionaire? Is to start with $1 billion. And that's if you're a bottom fisher. You think, okay, it dropped here. Okay, here, we've bottomed. I'll just buy it here. No? Okay, I'll buy this one. Here, this must be it. No, okay, dropped again. I'll buy this. No, I'll buy this one. I'll buy this. I'll buy this. This one, look at that big giant move back up. That's got to be the bottom. No, we don't know where the bottom is. It might go bankrupt for all we know. It's not making any money. And look how much look at the loss, minus $39 a share this year. I mean, this could go under. It's just, that's how poor this is. And here is let's see what this is, a monthly chart. Now we're still, again, look at the move this has made, and now we're starting to break down. after this long move. Now we had another one here in December 18. This is already looking worse with much bigger declines. So this is, and look at the volume, it's just picked up. So stock you shouldn't be part of. Okay, so we've seen this. That was stage 4. I just want to do one final thing and talk about the bases, because they do form stages. And this is Zscaler. This is one of the stocks here. I pointed out it was down almost 9% this day, more than 9 this day. That's 18% just in these 2 days. And you can see we were already in a stage 4 downtrend. So you should never not be in any part of this stock. But what we want to show here is that when stocks, this was the stage 2 uptrend you can see here. So this is when all the moving averages sort of aligning. So around here, this was probably the best spot to have bought it here, and you have taken part in this big move. Now maybe there were some sell signals like right here. You may not have lasted through this correction, and of course it went on to another move. Could have bought this breakout too, but eventually it's forming a number of bases. So we had a little base here, we had one here, we had one here, and then we have this one. Now this is a 4th stage base. And when you start getting up there in the number of bases, it means that the stock's already made a big move, and they're more prone to failure. So buying a late stage base like this too, the stock's already made a move from, call it $30 up to $200. So there may not be a lot of move left. So you want to be a little more careful. And these tend to fail too more often. In this case, it didn't fail. It actually broke out and had a gap up on earnings, looks like. Kind of corrected. It's common. It just came down to its 10-week, which is the 50-day, and then went on a final sort of blow-off run for whatever reason, going into earnings. Yeah, it looks like it was going into earnings. But this was a sell signal too. So you're coming out of a late-stage base, and you had a final run, and then look at the angle of this ascent. 1, 2, 3, 4, 5, 6, 7, was it 8? 1, 2, 3, 4, maybe 8 days up in a row after this long move on low volume. So I pointed it out over here. Not even, most of these days, not even average volume. That's another sell signal. And I do have a video course coming out, hopefully sooner than later. And we're going to start with all the selling rules. So that'll be available at some point. And I'll start pointing out all these things. So if you're in these stocks, you kind of understand what to look for, and help you navigate these things. But again, sometimes you would have sold here, you would have sold into this, and of course, what happens almost always is that you sell and the stock just keeps going up. So, and it gives you FOMO, fear of missing out. But you gotta tamp that down, because it's almost always the wrong thing to do when you get FOMO. Anyways, this one, if you hung in there, this was the sell signal. Going into earnings too, you could have hung in there, but it didn't have a terrible reaction, but that was the peak. So this was the topping pattern here. We came down, then we started to break below even this little consolidation here, and now we've entered stage 4, which is the downtrend. Now we're just making new lows. The relative strength is just going straight down. We're getting bigger moves on the downside. Interesting, the volume hasn't even picked up yet, but we're already down 54%. These charts are logarithmic, so everything looks more compacted. But if we didn't have a logarithmic chart, you'd see already a giant decline coming down here. On this chart, it looks like it's just a little bit, but we're already down 50% just because of the nature of these charts. So there's a little stock lesson and on bases and some sell signals there. So anyways, we'll continue with these videos. We'll be back next week with another one, and I'll try to give you a few more tips and pointers as time goes on. Oh, we didn't. We're already running all along. Tell you what, I'll do a real quick run through of the actual stocks on the watch and ready list. So 1 second. Okay, so let's go through these charts pretty quickly. This is our growth stock ready list, and we just have 2. We have ExxonMobil. Again, one of the few sectors that's been doing okay. You can see their earnings and sales have been very, very strong, of course, because with oil over $100. And we've broken out from a kind of an odd-shaped cup with handle. We don't like to see these kind of misshapen cups. and it's also been pretty volatile. But it did break out. It is buyable, but at this point, really nothing's advisable to buy. Even oil has gotten pretty volatile. This could head higher. It is set up. We're already sort of in the middle of the buy zone, but it is ready. So we do want to point it out. We're not buying anything at this point. It's just too few stocks are going up. We'd rather be, we want the herd going on a direction, not just the herd coming the other way, knocking us over. Next one is Mattel. This had a nice earnings reaction and broke out. And it's just kind of floating around in there. Again, it looks good. In a good market, we'd be buying this, but in this kind of market, we're just staying out. It could continue higher, and more likely it will get pulled down with the market. Now, if this doesn't get pulled down and sort of stays up there, or even come down a little bit, and then the market turns into an uptrend again, this may be a great one to buy. It may just be held down by the market at this point. But we'll continue to watch it. That's why we have our watch list, which we're now moving to. So the next one is PDC Energy, another oil and gas exploration company. It tried to break out, as many did. We had an ascending base, which is kind of an unusual. You have sort of a move up, another little cup, move up, move up. This one actually ended up failing like many, many stocks. So it's kind of resetting, but it's still really close to its all-time high. It has an RS of 97. So it looks pretty good, but we're going to keep watching that. We have just a few more. Jack Pacific, they manufacture toys and like licensed action figures. Again, this had a decent reaction on earnings, and it's more of a low price stock. Tried to break out as usual, and it's come back in. It's down at least 8%, so that would have, if you had bought the breakout, you would have been kicked out. But we're going to watch that. It's acting well. RS of 97. So really, it's outperforming basically all but just a couple percent of stocks. Here's a new one, another oil and gas name, of course, Schlumberger. They do provide technology services and project management services. And again, it's hanging in there. RS is 96. It's just been pretty volatile. We'd like to see it, not stop making these big moves. Like this was actually pretty nice here. We had a move down, came up, then tightened up right there. That was a nice buy right on this day here. But of course, in this market, it did break out and failed. So we're just seeing that same thing over. So we're watching that. General Dynamics, we've had this on for a while. You can see here, this is kind of a buy zone right there in a flat base. It's just kind of hovering around its 50-day. RS is 94. We'll watch that. This one we just added, Louisiana Pacific. It's they manufactured various wood products. Again, earnings. Most of these stocks that you're seeing that are doing okay is that the earnings were such that the market is liking it. And here we had this initial thing being pulled down with the market. Our buy zone is right above the 78.09, so we're at 78.10. That's where we would buy it. Hopefully it would tighten up here, and then we would buy the breakout in a good market again. And the last one on this list is ADP. The weakest of the weakest of the lot. RS is 87. This handle here is starting to get a little too large. It's already down 11%. A little bit more down, and off it goes from the list. You want the strongest stocks in this point. Let's move to the long-term outperformer watch list. We added a few more. First is Excel Service, and they provide business outsourcing. It's gotten volatile, but it is hugging its 50-day. Normally, we would say, hey, we'll buy a small position right here in a better market. You can see it's a nice long-term outperformer, been just nicely trending higher. This is a monthly chart I'm showing you. So, but again, this is we're just going to watch all these. It's not the market to be part of. GPK, graphic packaging. Again, it's gotten volatile right around its buy. It's tried to break out, and it's kind of holding, but not doing all that great. This one's kind of a newer company, but it's giving us the characteristics of nice long moves without tons of volatility. So that one looks pretty good. Here's one that's actually an interesting one, CBIZ, C-B-I-Z. Oh, sorry, I'm not giving you the, no, CBZ. That's the ticker. The last one was graphic packaging was GPK, and Excel services EXLS. This is CBiz. They provide financial employee and national practices services for businesses. Again, let's look at the monthly. Again, this is a it's kind of a choppy trader. Didn't do much for about 5 years, and now it looks like it's turning into a nice long-term outperformer. Again, like the other one, it's hugging its 50-day. Just solid earnings and sales for the most part over time. Let's look at the weekly. Yeah, it's just on equity is 13%. We really like to see 17% earning per share growth rate over 3 to 5 years, 17%. Just nicely increasing earnings over year. Yeah, looks like a good company. And the last one is Steris, ticker STE. This one has been really volatile. We don't like this, but if we go to a longer term chart, we do like this long move. So we're going to continue watching it. On the weekly chart, it has come down to this 40-week moving average, which has held support for a long time. But it's a little too volatile, so we're just going to continue to watch this one. Hopefully, it will tighten up and give us a buy signal. Now, normally, also, this 200-day has provided support twice. The third time sometimes will also work. If you have too many, then it gets too obvious, and then this usually doesn't work. But in this environment, we're just holding off. Also, earnings are just in a few days, next week, so we'll hold off on this. We don't want to buy anything in front of earnings in this environment. Okay, well, that's about it for our lists. I hope this is helpful, and we'll be back next week with another video. Okay, thanks.